Welcome everyone to today's panel on Bitcoin and banks. We have a variety of industry leaders who run digital banks, and I'm excited to welcome them to the panel. Quickly on me, before we go through intros, I'm the founder of Noah.com. We're building the world's simplest Bitcoin wallet, literally onboarding the next billion to Noah's Ark to save everyone from the currency flood. Before going through the intros, I just want to quickly run through what we're going to discuss today. So we're going to start by talking about the convergence of traditional banks and digital-backed banks, then move over to the differentiation of different digital banks, because more and more we'll see how many different solutions are coming up these days, especially at the conference. It would be good to understand where do you guys see gaps, where do you see opportunities, and where do you see the industry moving. And then I would love to talk about the technology stack of traditional banks and digital-first banks, and see how they could collaborate, how they could come together, or would that be a threat to traditional bank. And lastly, we'll cover regulations as well, which is obviously a very exciting topic. And if we have some time, we'll go through Q&A. So, Eric, why don't you start and give a quick intro about yourself?
Awesome. Good morning, everyone. Eric Queatham. I work at FIS in the Worldpay division. For those of you who aren't familiar with FIS, one of the largest banking software providers in the world, and Worldpay, which became part of the organization about 3 years ago, is the largest merchant acquirer in the world. So I run our emerging business team, look after our crypto team as part of that, and we'll kind of share some perspectives today from two lenses. One is, as an organization, as we think about supporting banks and helping them think through their journey within what's happening in blockchain and crypto, and then also as the largest acquirer or PSP in the world, the infrastructure that banks provide and the role in actually fiat to crypto on-ramp is quite critical and quite crucial to what we do. So I'll try to share a bit of that.
Awesome, thank you.
Thank you.
Nitin, I know you came in last minute, but...
Yeah. So I'll give my introduction. My name is Nitin Agarwal. I'm one of the co-founders and chief revenue officers of FV Bank. First, I'd like to apologize from my business partner and co-founder Miles' side. He was supposed to be there on the panel, but he's not feeling well, so I'm replacing him. Thanks for giving the opportunity. We are a bank based out of Puerto Rico. We provide US dollar banking to businesses and individuals globally. We also have a crypto custody license. We also are principal members of Visa. So as we see a lot of growth in the Bitcoin and the crypto sphere, we see that, like my colleague said, that the on-ramps and off-ramps are extremely important, and business banking is what is needed for that, and that's what we provide. That's about me.
Awesome, thank you, Nitin.
Good morning, everybody. Nick Lepetsos. I am the CEO of Jewel, soon to be operating as Jewel Bank. We are a full-service banking institution, focusing exclusively on the digital asset space and digital asset companies and institutions around the world. We are based in Bermuda, which is a very favorable location and domicile for digital asset businesses. And most notably, obviously, with the products that we offer are more traditional banking services, on-ramps and off-ramps for fiat currency, but also a settlement network, much like larger institutions are using now to be able to settle with counterparties on a 24/7, 365 availability. And looking forward to our launch in mid-2022, and already excited to be here today. Thank you.
Hey everybody, Caitlin Long. I'm founder and CEO of Custodia Bank. We have applied for Fed membership and Fed master account. We're not a periphery bank. We're up the middle of the fairway in the US with full service US licenses, and we are also about to launch. We will walk before we run, so we will not open broadly for a little bit yet for businesses. We are serving the niche that isn't served now, which is a US onshore bank, fully licensed to do business in all 50 states, domestically as well as internationally, to offer real-time gross settlement of Bitcoin versus US dollars. Nobody can offer that right now. not especially onshore. And because we cut out the layers of fees by offering an API-based service front to back, we will be able to offer better, faster, cheaper execution to our future customers once we're launched. I'm a Bitcoiner at heart, as most of you know. I'm a maxi. I've been around this space now for 10 years. And we are specifically attacking the problem that I know many of you are facing, which is that you have uncertainty with regard to the durability of your bank relationships. It turned out in the early part of Bitcoin that the businesses that survived turned on whether they actually had a durable bank relationship or not. We are seeing that widely in this industry, especially in Web3. Just that the traditional banks just won't service Web3 companies. And we're specializing in this industry. We know you, we come from you, and we really appreciate the support that you've all given us in building an industry utility domestically for those of you who need to use a domestic bank. Thank you.
Awesome, thank you, Caitlin. I just want to start with you actually, because we're going to jump into the topic of the convergence of traditional banks and Bitcoin. And given you're such a Bitcoin maxi, and day-to-day, you're building integrations with like traditional financial infrastructure, how do you see this in the next 5 years? Do you think, of course, it could be a temporary solution, for example, on-ramp where we bring people into Bitcoin, but at some point it could come full circle where we don't need, for example, that many on-ramps. So as a Bitcoin maxi, how do you see the convergence? Do you think it's needed in the long run, or is it temporary a thing? Yeah, we'd love to hear your thoughts here.
Oh, starting with?
Yeah.
Yeah. Well, ultimately, I don't think that we will need banks, but I think it's 20 years from now. And between now and then, the on and off ramps into this industry are very critical. And we haven't really seen the institutional demand come into this market yet, precisely for, I think, 2 reasons. Number one, there's not legal clarity. And that's what the state of Wyoming set out to do, and we've led the rest of the United States. I would say within 5 years we will see legal clarity. But what does that mean? A big institution that's a fiduciary needs to know that they actually have an enforceable legal claim against their counterparty. And if you look at the terms and conditions, say, of stablecoin issuers, they will actually disclose that they don't know that the stablecoin is a legally enforceable claim anywhere in the world. And so institutions can't handle those types of assets until they know they get legal clarity, a legally enforceable claim, clear legal title. And the second one is that, again, fiduciary institutions can't deal with a non-bank or a peripheral bank. They need to deal with a mainstream up the middle of the fairway bank. So the risk-taking parts of the institutional world are, of course, here in Bitcoin, and they don't have a challenge with dealing with a non-mainstream bank. But the big institutional money, the pension funds, endowments, foundations, corporate treasurers of the S&P 500, they need to actually have the enforceable legal claim, and they also want to deal with a bank. The big reason they want to deal with a bank instead of a fintech or a trust company has to do with how banks are treated, how customers of banks are treated in bankruptcy. And there's clear preference and clear legal separation of assets in the resolution of a bank, and that is not true in the resolution of a fintech, such as a money transmitter or a trust company.
Thank you very much. So Eric, I know your business is heavily reliant on bringing people into Bitcoin or crypto overall, and given Caitlin's arguments on in 20 years we might need those traditional banks. Where do you see your company fitting in? Where do you guys would pivot? If there would be a pivot, but where do you see the future of Worldpay?
Yeah, it's a great question. I think I don't think anyone ever set out to replace banks, but I think Caitlin's spot on, right? If the core banking infrastructure that exists in the world today does not evolve, it will be left in the dust, right? And I do think the timing is not short and medium term, but it's not too far out there, and we're seeing that. I think there's two big things that will happen. So number one is I think the legal or the regulatory clarity needs to quickly catch up. So that folks can start to operate in the space with clarity. I think that's, for me, education and regulatory clarity are the two things that are stopping the innovation within banks. I think second is, providers like ourselves, FIS, we've got to innovate, and in the rails that we support globally for banks to operate and run their business need to be able to interact and support these new protocols. And I think we're a ways from that, right? And I think there will be disruption there. Hopefully, as an organization, we can lean in and lead that. But I think it's coming.
Okay. Cool. So I want to jump to this, another topic that I had actually at third, which is the technology stack, right? I mean, you mentioned if they don't evolve, can they evolve? Like, if you look at the technology stack, they're built on, legacy financial infrastructure. They're still using Oracle databases, centralized clearing systems, and it's very hard. Like these people have been doing this for like the last 20, 30 years. Like, if let's assume they can't evolve, would there be a place for them? Maybe they just interact with the front end, like, the customer relationship side, whereas the back end would run through digital first or digital banks. Like maybe Nick or Nitin, what do you think here?
Yeah, I think so. What we have been hearing, or what has been the case, is that banks are usually slow, and that's because of the technology stack, and things take time to change. But we've seen that the new age bank, or the new banks which are coming, they are very nimble. They are picking up the right technology stacks, and it is a big driver in itself. So if you have the right technology stack, if you have the right, and we have our own proprietary core banking systems. We have built around a lot of APIs around that, etc. That's a very important thing to be able to reach the masses, and that technology supremacy will be needed in the new age banks. And the vision which we are as a group, as a team setting out here, that we will see that banks will play a very important part in the growth of this ecosystem, in being able to provide both on-ramps and off-ramps, being able to provide custody, being able to provide many other services around it, right? So for that, a technology stack is very important, in my opinion, and that's what the path we have been taking as well. From our standpoint, we think that there are three major things a bank will be needing, apart from the technology, and which is actually heavily dependent on technology. One, the banking services, which is on-ramps, off-ramps. The second is the custody, which is what a lot of, which will lead to a next level of growth. And third is the ability to give out cards. So these are the three things which we have been focused on, or which is where we are spending all our time and energy in. And we have a little bit of an advantage that we are walking before we run again, like my colleagues are saying exactly. We've been live, and we've been seeing a lot of use cases which are coming in Web3, which need banking. So we are learning significantly from the industry and evolving both our technology stack, our risk appetites, our compliance structures, etc., have been evolving. And that has been a tremendous journey so far, and we think that that's where we will keep on leading towards.
Yeah. Yeah, maybe Nick, if you...
Yeah, so I guess I look back at my history in the traditional banking world, and I think the banks that I've always worked for and helped to run, we've always thought of ourselves as being kind of a bank and then wrapping ourselves in technology. And I think my institution now, Jewel, and what we're trying to do is change that. We're trying to be a technology company that happens to be wrapped by a banking license to be able to provide those goods and services, provide those payment systems and so forth. So having said that, we want to think of ourselves as, at the core, as being a technology company. Bankers don't tend to build much in the way of the technology space. We tend to buy a lot of that. So, and we're good at it, actually, over the years with companies that are represented on stage today. We buy product, and in our case, what we're creating is an orchestration layer where we're fully API driven, for instance, to allow folks that run digital asset companies to be able to communicate with us and do all their banking via API. But we don't necessarily have to build everything at its core. So for instance, whether it be custody services or lending functions or transactional stablecoin networks, for instance, as we're setting up, those things, there are plenty of people represented by companies here at this conference that are very, very good in those areas. So I think what bankers have always been good at doing is kind of aggregating those services, those microservices, and that's exactly what we're doing. And I think that's what you're going to see. That's going to be the transition between what you have always been accustomed to in the banking business and what digital assets look like in the future. Sometimes we have this vision that old banks like the ones I've always worked for, are just going to go away overnight. And then there are going to be, whether it be the Bitcoin network or whether it be some other form of entity, there'll be new entities that spring up to provide those services. I think it's going to be more gradual than that. Caitlin mentioned a 20-year period of time as we continue to ramp fiat assets into the digital world. I agree with that assessment. I think it's going to be a really long time. It's just at the first inning of this, though, as we all understand. And over the next at least 5, 10, 7, 20 years, whatever it's going to be, you're going to see a massive on-ramping of fiat currencies into the digital world. You're going to need banks to be able to play in the existing payment systems that are already in the world. I made the point to somebody the other day. I said, probably 95% of the people at this conference are looking forward to the day where banks aren't necessary and where Bitcoin in particular can be used as a medium of exchange, store of value, unit of account, everything that money represents. But 98% of the people that are here still live in that hybrid world. We're still living in a fiat world where we have bank accounts, and we're still living then in a digital world. I say 98, there might be a little bit more, or might be more people here that are exclusively in the digital world than I'm giving them credit for. But anyway, we're going to live in that hybrid world for the time being, and I think that's exactly how banks make that transition.
Yeah.
We wait for the new technology that comes out, we incorporate that. You mentioned, I think we're not always early adopters of technology. We wait till things are a little bit more proven. And we also don't need technology that may be on the cutting edge. We're doing payments, for instance. I think that's a big space for banks. Stablecoin networks, settlement networks, things of that nature. So there's tried and true, proven technology out there that we can incorporate and then build that orchestration layer to be able to make that a really great client experience.
Makes sense.
I might just add one thing. I think, a business or a consumer can decide that they want to live in the digital world, but commerce interacts over a network, right? And so until all parties are actually there, you're going to be forced to bridge those worlds.
And obviously you see more and more participants like banking institutions, even new banks coming into the Bitcoin space, even in today's conference. I see so many new services as opposed to in the last year. And with that comes increasing, centralization, right? Now, obviously, Caitlin, given that you probably best know the Bitcoin ethos, is centralization bad? Is it good? How do you think about it? How would you justify it? And how would that, look in the bigger picture?
Is that for me?
Yeah.
Yes, okay. Centralization is bad, and I'll say something spicy. I actually disagree with you. I don't think the banks are good at technology. If the banks were good at technology, we wouldn't be here. I think they're actually crappy at technology. and some of the reason that it's meaningful is that the old payment systems, basically the back end of banks, are running on horse and buggy systems, okay? And they cannot handle the speed of digital assets. We talk amongst ourselves about how fast digital assets move, and maybe Bitcoin settling every 10 minutes or Ethereum settling every 3 minutes is too slow because Visa settles faster. Only on the front end does it look like it settles faster. Technically, it clears faster, but what's on the back end is absolutely awful. And the challenge is that all of this is going to replace what's on the back end of the banks. Is it going to take time? Yes. But the vast majority of banks can only settle their books and records once a day. Okay, stop and think about what that means for banks getting involved in digital assets. And I'll say something else spicy here. There are a lot of community banks and credit unions that are lending against Bitcoin. I think that is going to end in tears. And the reason it's going to end in tears is their books and records can only update once a day. Bitcoin settles every 10 minutes. You start having transactions that settle every 10 minutes and having a bank run settle every 10 minutes with irreversibility, and having a bank run happen intraday, and a lot of these small institutions wouldn't even know it until they settle their books and records overnight. Yeah. As huge a Bitcoiner as I am very worried about the involvement of community and community banks and credit unions in Bitcoin. They don't have the systems to handle it. The way that you have to build, and it sounds like everybody here is building API-based systems that can go 24/7, 365, where we actually have risk monitoring, we're updating our books and records every day. But here's a critical distinction about the way Custodia is thinking about it. We do not lend. We don't want to lend, and the reason we don't want to lend is precisely what I just alluded. When you have banks that lend, and especially banks that have systems that only update their books and records once a day, that is a huge counterparty risk. One of the problems with the community banks and credit unions lending against Bitcoin is that if the custodian is hacked, the loss given default and that loan is 100%. And you have FDIC insured and NCUA insured banks and credit unions now lending against Bitcoin. That's at the heart of the financial system. So when the regulators say they're worried about financial stability implications of this, that's where the financial stability implication to worry about is. It's not in the non-lending institutions that don't do maturity transformation and therefore aren't subject to a run for that reason, and also don't ever have a possibility of getting overdrawn at the Fed. So as you think about the banks that you use as counterparty, I would really encourage you to dig into how fast their systems update, and if they have the ability to lend, how good are their risk systems? The vast majority of banks have no business being involved in Bitcoin, and I say that as hardcore a bleeding orange person as most of us here.
And would you mind shedding some light on like Avantis, like tech stack, how you guys are built, or what would you suggest the kind of like future forward-looking banks would do it?
Pardon me?
Avantis, like how is Avantis like tech stack build?
So the way I like to describe it is we're Ferrari front to back. It's an API-based system. We are not horse and buggy back end and Ferrari front end. There are a lot of banks, including some of the banks that service this industry, that spent years building middleware to take that horse and buggy back end and put a Ferrari front end on it. But we didn't need to do that. We just cut through that, and we're API-based front to back. There are a lot of service providers in the financial services industry that wouldn't exist if the banks did a good job on technology. So I'll give you an obvious example. Brian Bishop, our former CTO, likes to say this. I got to give him credit. Stripe shouldn't exist. If the banks did their job, Stripe wouldn't need to exist because you'd have APIs. The banks basically would be the middleware providers, but they're not. They don't provide the middleware. There are middleware providers all over the crypto industry that are extracting large fees. And if the banks actually had API-based front-to-back systems, which is what we've built, then all those middleware providers are going to be disintermediated away, and all those fees will be disintermediated away, and all of you businesses would have higher profit margins as a result.
Wow, thank you.
I'll just add one point, and you make a very, very strong point. Banks have been slow, and it's largely because they've not been technology-oriented. And I think the era and what we can lead from here is that we provide these API-based systems, and on top of it, all the fintech companies can then innovate. If our base is strong and the things which we as bankers provide, if the strong base of all the risk management, et cetera, what you spoke about, but allow all the fintech companies to innovate on top of it, all the e-commerce companies to innovate on top of it, or all the crypto companies to innovate on top of it, we'll see a massive change in this industry. And I think that's what we should be leading towards.
Agreed.
Agree. Okay, cool. So I want to, I think Bitcoin has certain use cases right now that are, I would say killer apps, right? Both consumer and institutionals, and we all know them. But given that there is more innovation happening currently on Bitcoin, and more, Lightning is progressing, what are some of the future killer apps you guys are more excited about? Both, I would say, we have to segment this in two territories, like let's say the Western markets and then emerging markets, because as you know, Bitcoin plays a different role in those markets because their currencies are far more worse, and the adoption happens at a higher rate. So maybe, Eric, you start off with that.
I might pass the buck actually to these guys. Yeah.
Yeah, maybe Nick.
Yeah, I guess as far as use cases, again, I'm not a technology practitioner, and so I don't know all the cutting edge applications that are being built for Bitcoin. But payments is the use case, and transfer of value, I think.
Yeah.
And when I say transfer of value, I mean transfer of value across the globe, because I was born and raised in a system that is kind of inherent to the United States only, where it's very easy, not necessarily efficient, not necessarily inexpensive to move money around through the wire system, ACH, things of that nature. They're all in some way inferior to what you can do with Bitcoin. So I think payments in some form, moving money around the globe more efficiently, with more finality, more securely. I have a personal issue with people thinking that Bitcoin is less secure from an AML standpoint and knowing your customers. Because I think folks that might have nefarious goals and aims would not necessarily ever use blockchain technology to move money around. So I have a different viewpoint on that than maybe even some regulators do. I think this is a movement and moving into payments and where we see payment flows around the world happening much faster, much more efficiently. And it democratizes the movement of money. It democratizes really the holding of money. So again, not as dyed in the wool in terms of people in this room, in terms of their Bitcoin holdings and so forth. I still believe that there are tremendous use cases for moving money rather than just the speculative use case.
100%. I just want to push one more time on this. I think payment is known. I would like to compare Bitcoin to kind of the invention of the steam engine, right? When it started off, it looked like something very interesting, but it kicked off the Industrial Revolution. It kicked off capitalism came out of that, communism came out of that. It was so much things that we couldn't anticipate, right? And the internet, the same thing. The first internet companies, they were information repositories, right? So people wouldn't thought that actually social networks would change or the way we work will change. And I just want to, maybe Caitlin, the second order effect. Of course, we know payment, we know store of value, but what about do nations change? Because the concept of nations is not that old. We used to have kingdoms, religions. There are different. It's basically the foundation of how people organize themselves. And when money changes, and if something so foundational changes like money or transfer of value or exchange, it changes everything that has been built on top of it, right? And the entire society. Maybe, Kevin, you have some ideas, or.
Yeah, money's a social construct. So a lot of us living through COVID and the war in the world right now are wars, actually, in the world right now are going to some dark places. And if you think about, is Bitcoin going to survive something like that? Yes, thanks to Blockstream putting Bitcoin on satellites and running Bitcoin transactions on ham radio. So if the entire internet goes down, Bitcoin won't. But I think most of us recognize that money is a social construct. You need society to operate in order for money to, for these networks to function. And so ultimately, I think Bitcoin brings people together in a different way. Especially than the traditional financial services industry does, which has actually excluded a lot of people from access to banking services. Do you need a bank for that? No, absolutely. Folks can go peer-to-peer. I'm a big fan of the peer-to-peer uses. So why start a bank? Because you need on and off ramps that are big and wide, that are easy, so that money can flow into the Bitcoin system and back out, but most of it, I think, will be flowing into it over time. And I think banks actually don't completely disappear. They go back to what they were in the 1800s, which is pure service providers, and that's the business model that we have at Custodia. It's a purely service provider business model. For custody, the legal title to the asset doesn't transfer over to the bank, which is how custody works right now for securities. You're actually giving title to your securities custodian, and that's important because, again, if we go down, the legal title remains yours. But also banks that essentially just are just pure service providers, not counterparties. That's a huge difference. And again, being a non-lending bank, that's why it's so important for us as a counterparty to maintain that fortress balance sheet, because we don't want to be your counterparty, we just want to be your service provider. And that's what I think most folks think banks should be, but banks got so far away from that because they wanted to go fractional reserve, they wanted to play the maturity transformation and credit risk-taking roles of a lender. We should actually, from a risk perspective, given that these digital assets settle in minutes with irreversibility, the combination of those two things, i.e. a bank that does maturity transformation and takes credit risk, with payment vehicles that settle in minutes with irreversibility, that is a recipe for bank runs. And that is a reason why we don't want to take the maturity transformation and credit risk as a company, because we don't want to be your counterparty and put counterparty risk on you. We want to be a service provider. And that's the way I think banks will evolve in this industry. They won't completely go away, but the transition of these highly leveraged, especially huge banks, what's called the globally systemically important banks, or GSIBs, the transition from those highly leveraged balance sheets to what I think we will end up with in 20 years, which is banks as mere service providers, that's going to be a fascinating process to watch, and there's an enormous amount of systemic risk. And by the way, as I talked with the regulators, one last quick thought, the speeding up of payments, whether FedNow or any of the other real-time gross settlement systems in the world that are not crypto-based, the speeding up of payments is going to force a deleveraging of the banks anyway, because the margin for error, when you settle something only once a day, you've got a lot of margin for error to fix operational issues. But when you're settling something real-time gross, 24/7, 365, those banks just can't be as leveraged as they are. And there's going to be a forced deleveraging. That was already coming before crypto came about, and now crypto is just going to accelerate that.
Okay. And as you mentioned, like the transition from these traditional highly leveraged banks to now becoming to newer forms of Bitcoin-native banks, let's call it this way. I have to say, I see a lot of offering. There's a lot of players, and one, I want to understand, maybe Nick and Nitin, how do you guys differentiate yourself? Like, what's the strategy on differentiation? Because often to me, it's like I hear the same thing: custody, on-ramp, off-ramp. But for me, I want to go always to the best player, or like at least the one that is focusing on a specific niche. And then, do you also see consolidation in the market now, or maybe in 2 years? Where do you? How do you think about that?
So let me just pick up a little bit your thread a little from 2 steps back.
Yeah,
but
sure.
Right now, where we are, it's a technology-led innovation. Means we are in the Bitcoin age, right?
Yeah.
So we are in the Bitcoin conference, and that's one of the biggest innovation which technology has given us in the last, I don't know, a decade or so, right? Maybe in 2 decades. That's the best innovation which we have seen. And I think but we are still in too early. We are still in infancy stage. We think that the need of centralization is still there for a period of time, maybe 20 years, maybe more. But eventually we will lead to that place, right? So that's where we are today. And what we see currently is there's so much of technology-led innovation which is happening right now, and that's where we want to be. We want to be a bank who understands these innovations in the crypto ecosystems which are happening. Means we are talking about different Lightning networks and other networks coming up, and a lot more innovation happening in the crypto ecosystems, in the Bitcoin ecosystem. Then there will be many more which will happen in the years to come. Where we see our differentiation is that we want to understand what's that innovation happening, and we want to be able to provide services to them. Be a bank behind them, a solid provider behind them, to be able, so that all the other technology-led innovations in the fintech ecosystems can grow, can innovate on top of us. So that's how we see ourselves as a differentiation.
Okay.
Yeah, differentiation is the question in terms of how we make a mark for ourselves in the world. And I guess for Jewel Bank, it is more geographic than anything else. So I mentioned earlier that banks don't necessarily develop or create cutting-edge technology that would be a key differentiator. We normally adopt those and bring those into the systems. But for us, what we're seeing globally with Bitcoin and blockchain in general is the need for the ability to have commercial banking services that are non-US based. So we have clients right now, or potential clients as we start the bank, who are non-US clients servicing non-US customers of theirs, and they seek out a non-US institution that can provide the same level of services that they may be accustomed to in their home country at this point. So for us, it's more geographic, expanding the geography to different currencies, and just different operating jurisdictions is what we're doing.
Okay, great.
And we're in the opposite niche, which is a domestic bank. That a lot of folks think that state-chartered banks are somehow lesser than federally chartered banks in the United States, but it's not true. We have in the U.S. a dual banking system, and some of the largest banks in the United States, like State Street or Goldman Sachs' Marcus, are also state-chartered. And in fact, actually, due to parity laws, the state-chartered banks actually have the ability to do business interstate in all 50 states. And so really there's no difference between a nationally chartered bank and a state chartered bank. That's part of the reason why the states have actually made more progress in innovation. The state bank regulators typically have economic development and innovation as part of their mission, whereas the federal bank regulators do not. That's why you see that the federal bank regulators essentially doing nothing. They're certainly paying. They have innovation offices and they're working on it, but they're not actually innovating. And that's because it's not part of their mission to do so, whereas state bank regulators, it is part of their mission to do so. And if state banks and federal banks can do exactly the same thing, then the states are where the innovation is going to happen, and most of the onshore banks that are innovating are going to be state chartered, and Wyoming's leading the way.
So now, I mean, also good timing to get into regulation quickly. I know you are a Wyoming-based company, and I know that there's obviously the state has done a lot to help Bitcoin companies. So, what's the latest there? How would, if you were to advocate for the Wyoming state, what would you say to the audience? That would be, I think, interesting.
Yeah, well, Wyoming's laws are the closest to the ethos of Bitcoin as any state laws can be. The laws are set up so these special purpose banks like Custodia cannot lend, and therefore cannot saddle you with losses that are socialized while the owners of the bank privatize profits. That's been one of the biggest issues in the banking industry. And the Wyoming laws also give you clear legal title and clarity with respect to the commercial obligations in a transaction of the parties that are transacting. So if you end up in a dispute, then you know exactly where you stand. Moreover, the special purpose depository institutions in Wyoming are not allowed to rehypothecate, my favorite topic, most of you know if you follow me on Twitter, not allowed to rehypothecate your assets. And so while in the securities industry, your securities are rehypothecated. There are probably maybe 10 or 20 different entities that own a single treasury. And so in the event that the system seizes up, who really owns that single treasury when 20 different parties think they do? Those are the kind of shenanigans that happen in the traditional financial industry. Those are outlawed in Wyoming. So there are real protections for the customers of the Wyoming SPDI banks, and they're designed to get at the ethos of Bitcoin, which is based on fundamental solvency. The great thing about Bitcoin, the greatest innovation of Satoshi, was Satoshi created money that's not issued by anyone, and therefore doesn't have a counterparty. And so while a bank that services it is a legal entity that is an intermediary that you're facing, we want to strip away all that counterparty risk and take away all that default risk for you so that the bank becomes just a service provider as opposed to a counterparty. It's as close to the ethos of Bitcoin as it possibly can be, while still being a bank to bridge these two systems.
Thank you. Eric, how is Worldpay operating in this global moving landscape of, it's really hard to make a strategy when all these countries are constantly changing, moving fast. Europe is working on something. I think UK has got some fire. US came with their executive order. How are you guys operating at so much uncertainty and new laws coming up?
Yeah, for us, the world is still quite bifurcated, right? Where we play in the space is, we're treating the on-ramp or the portion that we support as a traditional card transaction or other alternative payment method. And so we're still being regulated as if, it's just a normal, B2C transaction. But what we're finding is, the lack of clarity around the intersection of where our role stops and ends and the networks and everyone else involved in that process, and where the actual transfer of funds and the conversion of these fiat to crypto assets take place is starting to blur quite a bit, right? And I think people probably saw the announcement today with Wire and Bolt, right? I think the world, and Caitlin, mentioned the use or the proliferation of Stripe, right? Due to the lack of the banks kind of playing their role. I think you're going to see those worlds come together more, and I think that's where the regulatory framework is going to get even more complex, not less complex, and particularly for a company like us where we're supporting customers from a crypto perspective in 42 countries around the world today. The amount of legal opinions that we try to extract from people so that we can make good decisions is difficult, right? And so I think what it's going to take is organizations who are spending private dollars to help educate public institutions so that they can actually start to create opinions and create a framework that allows folks to operate as those worlds come together.
Awesome. Thank you so much. And that was our last discussion. I wanted to thank everyone for joining. Thank you, Kathleen. Thank you, Nick, Nitin, and Eric for